Hi, everyone. My name is Dustin Miles with Momentum Multifamily. Super excited to have my friend Erin Hudson here today. I don't know when we first met, but it's been a while. I think we met at maybe a Rod Cleef concert, or not concert, conference, or some other conference. I can't recall. Anyways, but when you meet Erin, you'll won't forget. She's very high energy, and so. We'll kind of get into it, but from healing spines to building empires, Dr. Erin Hudson went from a thriving chiropractic practice to managing over 2,500 multifamily units. How'd you make that leap? Let's find out. So, Erin, excited to have you here today. Great to see you as always. And I know you're mother of five. You got a lot of stuff going on. You're one of the founding partners of Quattro, and so yeah, if you could just kind of give a little background on you, and we'll kind of dive into it.
Awesome. Well, listen, it is an absolute pleasure to be here, Dustin. I hope to add value and drop some nuggets while we're on this podcast here recording. I guess just to level set, everyone always says, "What do you mean? You were a doctor and now you're in multifamily?" And so they're a little bit thrown off, right?
Yeah.
And listen, they're not alone when they have those thoughts, because when I made the leap from going from being in practice to going full time in real estate, truly, my family thought that I had lost my freaking marbles as well as my colleagues. But let me just give you like a little quick little rundown on kind of what it looked like for me and kind of how I was raised, and then we can stack and pack from there. And listen, stay tuned, get that pen and paper out. The next 30 minutes is going to be fire. Right, Dustin?
Let's go.
So basically, I grew up in a home of five children, and I can tell you without a shadow of a doubt, we never sat at that dinner table talking about investments and what my retirement was going to look like and where we were going to put our hard earned money. Those were not the conversations. Clearly, you can see I was not fed with a silver spoon. And so, long story short, I ended up going to school to become a doctor. And truthfully, I am not the smartest student, but what I will tell you is I have something called grit, and there's no quit in me. And so it doesn't matter how long it's going to take, I'm going to figure it out. And you'll see as I share some stories along the way during this podcast. But, anyways, I ended up graduating, became a doctor, opened up my practice. I've been at it for 13 years. Along the way, listen, I think that doctors great at bringing in those patients, but we really are trading time for money. It's like if we're not there taking care of those patients, then the money is not coming in. And I had always known about real estate, but I never thought it was possible to be a part. And so along the way, I started to get into single family investing. Living in California, the median house price was, my goodness, $800,000 for a 1950s home with 19 or 1,500 square feet. And here I was investing and buying single family properties in Indianapolis, Indiana, and that was my start. Why?
Hmm.
Because I could purchase them for $50,000. And
Wow.
so, with that being said, that was little my entry into real estate, the beginning. Within 2 years, I had acquired 26 rental properties strategically with some really great negotiations. And then all of the sudden, I got introduced to multifamily and got invited to go to a event. And I want to share this with you because this was my initial thought. When I got invited, I remember looking at my girlfriend thinking, I have no business going to a multifamily conference, because truly you have to be a billionaire or a multi millionaire to purchase apartment buildings. And so I went to the event. I sat in the front row. I was the girl with my arms crossed saying, why in the heck am I here? And then all of the sudden, it was as if the Red Sea had parted. And I like to say it this way, guys. Here's what it looked like. We've all played the game of Monopoly. I was the girl that kept landing on Vermont, i.e., my single family rental properties. And now I just found out that I am 100% worthy, 100% capable of landing on Boardwalk every single time. And let's just say the rest is history. So, Dustin, that's where you have it, and we can dig in and go in whatever direction you desire, my friend.
Awesome. Yeah. No, there's yeah, a lot there for sure. And it's amazing to see. I mean, I know, mother of five and a doctor, chiropractor, and then, multifamily. So I mean, that's a lot to juggle and just interesting to see, yeah, kind of how you've evolved and all that. So I think you said you were in 231 transactions. So was that some multifamily or all single family, or what did that look like?
I love that you asked because listen, I think everybody in the world out there, not everybody, but a good portion say, you know what?
Mhm.
I'm just not qualified. I don't know enough about real estate. How in the world could I ever be a part? And guess what? Nor did I. I just knew that I wanted to get into the space. And how it really worked is I had heard that there was something called a double close. And for the
Mhm.
listeners that are like, what in the heck is a double close? I'm going to give you a quick little analogy. Let's just say that Dustin had a home that he wanted to sell and he sold it to me and we put it under contract for $50,000. We were going to close that contract on June 1st. I then go find Billy Bob to buy the property, not for 50, but for 100,000. And check it out. We would close on the same day as Dustin and I close, which is June 1st. So here's the aha from that. I owe Dustin 50, but I just got a new buyer that's going to pay 100 for the same house. I'm sorry. So Billy Bob, he takes his $100,000, he puts it in escrow. We sign the closing docs. The 50,000 goes towards Dustin and who gets the other 50? Me. And so I did a lot of double closes like that. The other thing I would do is I'll never forget, I bought 3 homes in Indiana for $100,000.
Wow.
Turned around, I took 2 of the homes, I increased the price to $50,000 each, and I turned around and I sold those to another party. And what did I do? I kept one for free for me. So I was not the chick that had all this money sitting in a bank to buy 26 properties. I just rinsed and repeated that, and there you have it. I ended up with 20
Wow.
properties. So
Wow.
fun
Yeah.
stuff.
Yeah, that's awesome. I mean, that, takes, I'm sure, a lot of effort, a lot of, you figure out a system and then you work that system and you work it, and then you see the output. If you could, I'd be super interested in your, kind of your first multifamily deal, what that looked like, and I'm sure you learned a ton from it. So.
No, for sure it did. I will happily share. Nothing like vulnerability. So I'm happy to disclose and air my dirty laundry. But let me go back real quick because, yes, I had acquired 26 rental properties myself, but Dustin mentioned that I had done over 231 transactions. So
Hmm.
as I was on that acquiring stage within that 2 years, I had a lot of friends and a lot of colleagues that were saying, wait a minute, I heard you're investing in Indiana with these rental properties. Can you help me? So
Hmm.
the net of that was when I got in, I was paying, call it $50,000 for a single family rental property. And I found out very quickly that you could actually purchase properties there for, call it 30,000 of the same caliber. So what I would do is I would buy, call it the one for 30, and then I'd turn around and sell it for 35 or 40,000 to my friends and on all the colleagues, right? And so here's the crazy part is when you hang tight because it's going to tie, you'll understand why
Hmm.
I'm sharing this. I would share with the people that, as a matter of fact, I'd gotten on a podcast or I had a webinar because all these people were interested and there was only so much of
Wow.
me, right? So I
Yeah.
got on this, I created this little webinar and I'll never forget. Somebody says to me, Erin, why in the world should I go through you to purchase my property versus ABC 123 down the street who's been doing it? I said, well, listen, I've only been doing it for 2 years. I said, and so I'm just sharing with you what I've been doing. But the truth is, you should probably go with ABC 123. They've been at it for 20 years and they clearly know what they're doing. You're just going to pay a premium versus
Yeah.
giving you a discount and you paying far less than even I did when I got started. So
Yep.
here's the deal. When you take things off the table, when you're transparent, real, and raw, people want it more. So
Yep.
fast forward, ended up doing these 231 transactions. So you asked, where in the heck, how in the heck, when in the heck did I do the multifamily property? Well, here's the thing. On the multifamily property, there was a couple that was part of my mentorship group, and they had come up to me at one of the events and said, listen, I found a property. Would you like to come and raise the money? So my
Oh,
question was, how much money do you need? And they said $2 million. Well, when I go back and I reflect what I said to all of those folks that had done business with me, I said, look, I'm moving up into the multifamily space, and it's going to take a while to get educated and get equipped and have the right skill sets. Because,
right, right.
Dustin, when you're taking
Yep,
people's money, that's a whole nother animal.
yep. Yep.
I have not borrowed anyone's money. And so with that being said, I wanted to make sure that I was skillful and ready to move in that direction. And so fast forward, I went back to them and asked if they wanted to come play in the playground after 2 years of me getting equipped. And sure enough, the $2 million came in. So anyhow, I guess we'll go in the vulnerability direction. Let's just say that first property was an absolute flop. And the
Mm,
reason I say it was a flop was number one, it was a 100+ unit apartment building in Texas.
mm.
And the partners that I decided to partner up with, they actually 2 days after close stole money out of the bank account.
Oh, geez.
Yep, to the
Oh,
tune of 35,000. So it wasn't 400,000 or anything like
yeah,
that. It doesn't matter
yeah,
the amount, it's the principle and taking
yep,
money that doesn't belong to you, right? And
yep.
for all the listeners here, let me just share with you that is something that cannot happen because number one, on the contract, we said buyer's agent gets a whopping 0% commission. Number
Mm,
two is if you are an investor with Dustin, which brilliant, you should be, he's amazing, that there is something called sources and uses of funds. And you have to be very direct as to where every penny that comes in and goes out is accounted for. And we never had anything for brokers' commission.
mm.
So, long story short, I had to hire an attorney, I had to remove them out, and I had to operate the business on my own for quite
Oh,
some time
wow.
until I brought in a really great, favorable partner. The good news is we were able to sell it. We bought this 100+ unit for $5 million. We turned around and sold it for $7.2 million. It was just a hairy, hairy 3 years. Let me just say that much.
Yeah,
We'll
yeah.
leave it there.
Yeah, yeah, yeah. Got it. Yeah, nothing like yeah, jumping into the deep end and learn how to swim from there. So,
Well, I
um
think there's Dustin, I think that there's so many takeaways. And
mhm.
even from that negative happening, there was so much goodness that I learned. It was a costly,
Right.
costly tuition.
Yeah.
But I will say, and I'm happy to go there if you want to go more into detail, but from the crap that happened, goodness unfolded. And that is truly how I met my Quattro partners, which was all from a philanthropic event
Oh,
uh,
wow.
from the
Okay.
partners that I have today. So happy
Yeah,
to
that's
share.
awesome.
Yeah.
That's cool. Yeah. And it's the difficulties and all that. That's when you learn when everything's bebopping along, you honestly don't really learn a whole lot. So, it's I know for me, I've had, I've had some deals that were pretty tough and really, and I had to, kind of roll up your sleeves and you just keep chipping away, chipping away, chipping away, and until kind of make some progress and all that. So, yeah, it's the deals where turn around and maybe get some help from cap rate compression or something like that, and you do really well. You don't learn a whole lot there, so I guess good looks good on the resume, but um, yeah. I was so the past we own at least I don't know where all you guys own. I know we both own in Houston, and I'd love to just kind of learn what you guys as far as asset management and just kind of operating and all that, maybe some things you guys have learned over the past few years, or how you've maybe shifted, like the market. it's been, honestly pretty flat. No rent growth. It's been pretty, in general, pretty challenging to operate. And then when, you've had high insurance and some other stuff, go on as well. So yeah, just kind of, yeah, I'd love to hear, maybe some things you guys have learned or changed over the past few years on maybe the operations side of things.
Sure. Yeah, happy to go there. That was a handful. So let me hit on some of them. And if you need to bring
Yep.
me back because I squirrel, do that, my friend.
Yeah.
So it's been a really awesome ride with Team Quattro. It makes up five of us. Quattro does not stand for we have five partners. It
Mhm.
actually stands for profit, people, philanthropy, and of course, properties, right?
Okay.
And so,
Mhm.
with that being said, our team has done some exceptional things. 2021, we were flying like eagles. It was an amazing time. As a matter
Yeah.
of fact, we had purchased 17 apartment buildings in 2021 alone
Wow.
with
Wow.
the partners. So we know our capabilities. I feel like I wake up every morning and like pinch me. I work with the most incredible partners that are so brilliant, especially having that screw up round one. It got
Mhm.
much better. And so
Yeah.
listen, I think that yes, we've purchased 28 apartment buildings together since we've been, gosh, it's been 5 years now. And we've also offloaded, my goodness, I think we're up to 12 properties right now. And some would say, we've sold some of those properties just in this last year and a half. And so a lot of people's question, Dustin, is, oh my gosh, were all those properties in trouble and you had to sell?
Mm.
Great news. Out of all of the dispositions and the exits we've had, we've netted our investors over a 22% return.
Oh,
Now,
wow.
that was not because one did wildly well and the rest just rode the coattail. No, no,
Mhm.
no, no. This was literally every single property did over a 22% return annually. But that's also because we bought at such a low basis and
Mm.
because we purchased conservative, which then takes me to where we're at with the market and what's unfolded in the last 2 years. I would be lying to you if I didn't
Mhm.
say we went through some tumultuous times. And
Yeah.
here's why we had those tumultuous times, which any operator in the space can absolutely understand and level set with me because, as maybe you don't know, but roughly 2 years ago, the bank shut down and they were not lending money. And why does that become a problem if we have existing properties? It
Mm.
becomes a problem because I'll use, for example, one of our properties that we purchased had a $6 million CapEx budget, for example.
Oh,
And the
wow.
banks are supposed to pay the $6 million CapEx budget as we do some of those turns. And we
Yep.
make the property and the units beautiful.
Yep.
Well, this particular property, they wanted us to submit our vendor invoices at if they were $1 million or more. They didn't want to have a bunch of them, so we had to have it a
Oh,
million.
wow. Yeah.
But we send in the $1 million. We're waiting for part of our $6 million to come, and they literally stonewalled us. They literally were silenced us. They weren't going to give us the money. Nobody was responding. And
Wow.
this is where the brilliance came in from the team. We said, this is just one property, and I'm sure we're going to have a couple others because everyone's following suit and the banks are holding their money.
Yep.
And so the five of us brilliant minds got together and we said, holy smokes, let's create a fixed income fund where people can bring in the money in this fund and we can use it pro rata we had five properties at that time that were in that
Mhm.
same exact position. And believe it or not, they were the five most recent properties purchased,
Mhm.
right, in 2022. So
Yep.
with that being said, initially, when we shared with our investors, they went, oh my gosh, but look, you have two options. You can either do a capital call on the
Yep.
property, or you could be strategic and create a fixed income fund and help. Why does that help? Because with a capital call, you're decreasing your ownership percentage.
Yep.
But imagine if you created a fixed income fund and that money that was in the fixed income fund just came in and it replaced what the bank was already supposed to give for that property. You're not
Mhm.
increasing the debt on that
Yeah.
property. You're just replacing it. And so
Yep.
we actually did a service for our investors because here's the thing. Not only were they going to earn in that apartment building, but they were also had an opportunity instead of having a capital call to put their money into the fixed income fund and be able to make a great return on their money, i.e., creating two income streams.
Hmm.
So that is the beauty of what we did. And thank goodness it worked out amazing. We raised over $12 million,
Oh,
and
wow.
pro rata, we were able to help with those, the properties pro rata serviced that debt. And I think the biggest thing that got our folks, investors investing with us in the fixed income fund was because, listen, most funds charge an asset management fee of the funds,
Yep.
anywhere from 2
Yep.
to 5%.
Hmm.
Our team just wanted our properties to be healthy and to do what was great and for the betterment of the properties. We did not even charge a 2% fee. We literally did not want to burden any property. We wanted to do what was right as operators and help these to be healthy so that we can really, the big thing was is if the banks are delaying giving the money, then it
Hmm.
slows down the performance and it's harder to hit our metrics. And
Yep.
so we didn't
Yep.
want that to be hindered. And so we were proactive. We created the fund, and I am thrilled today to tell you that we have not lost a property and that we were able to come back on top, and pretty exciting for sure.
Awesome. That's great. Yeah, that's very, yeah, very creative. I hadn't heard of anyone else doing that. So for that purpose, but that's awesome. Yeah, we had some we had some lenders that we did the work, and they were like, hey, keep, in fact, they, kind of told us to accelerate the work. And so we did, and then we're like, hey, here's the invoices, let's, get them paid. And they just told us, we're not going to reimburse capex right now. So yeah, we've had that on some others, or they tell us, hey, this isn't working and we'd like to shift over to this type of upgrade. And sometimes they won't let you, they're like, this is what it says in the loan docs, it's what you gotta do. And so we're like, that doesn't make any sense. So anyways, but yeah, can be definitely difficult to kind of maneuver those waters for sure. And just in the market's interesting right now. We're seeing. We just had a meetup, and James Ing was the speaker there, and so got to hear him speak. And so it's interesting. We're seeing starting to see, especially on newer properties, kind of 90s and newer. We're seeing a lot of high offer counts and all that. B, not near as much, and then C, C class stuff. There's not as much movement there. But I just curious, where Quattro is and all that. If you guys are kind of just kind of, I guess kind of zooming back a little bit. What markets are you guys currently in? I know you're in Houston. I'm not sure what other markets you're in, and yeah.
Yeah, so listen, I think that first of all, we're in the Sun Belt states.
Oh,
So
cool.
we
Okay.
own Tennessee, Alabama, Indiana is kind of our little out there,
Oh,
Texas,
cool.
Georgia. We love the Sun Belt states.
Hmm.
But I think that the big differentiator on us, well, I feel like, yes, there's a lot of people that are in Texas for sure.
Yep.
The big differentiator for us is that we want to follow clearly what businesses are coming in and what is that
Hmm.
medium income and where's that growth at. That is the
Yep.
first thing that we look at when we're looking to buy. We also
Hmm.
want to make sure that we are diversified in our areas of where we're purchasing. There's a lot of people heavy, for example, in Dallas or just Houston
Hmm.
alone. And you
Yep.
can see, I try to tell, our investors, look, with our 28 properties we've purchased, those are 28 different businesses.
Yep.
And so, yes, you can diversify more and go into the stock market and et cetera, but you also are mitigating and decreasing the liabilities when you are in diversified markets, right?
Hmm.
And
Yeah.
so there's a lot of people, I have a lot of colleagues that are in just one market and it's all about being able to scale and use your property management and all of it in one market. But Texas is a great example as to why things went shoddy real fast. And
Mm.
so, yes, you have the market doing its wonky thing from 2 years ago with the interest rates and et cetera, and the banks not wanting to lend. Mind you, that's just one issue. But
Yep.
you begin to stack that, and guess what else happened in Texas? All of a sudden, insurance doubled for many operators around.
Mm.
And then globally, then all of a sudden, not only do you have insurance, then you have taxes doubling. So you can see
Mm.
that's a trifecta of headwinds. And that is painful for any operator to overcome, whether they are an exceptional operator or somebody that
Yeah.
just was
Yeah.
trying to ride the wave and is clearly not having a good time. So
Yep.
you can see the importance of mitigating your risk by being in
Mhm.
diversified markets for sure. So it's really unfortunate what is happening with other operators out there and them losing their properties. And they're
Mhm.
phenomenal operators that you're like, how in the world? But some stuff
Right. Yeah.
you can only control the controllables. The uncontrollables, good luck, my friend. Sometimes
Yep.
there's can't do. So I guess, to further your question, you said, well, what's Quattro doing? Well, I don't know about you, my friend, but the market, there's properties that are going back to the banks. And let's really
Yep.
think about that for just one moment. The banks are not in the business to operate a multifamily property. And the last thing they want is these large apartment buildings on their books. It looks really bad for them. So we are prepping, we are getting ready, we are talking to banks, and we are looking to acquire properties at 50 cents on the dollar. And because Quattro has purchased 28 apartment buildings and lenders and banks are aware of us not coming back and retrading, taking our properties across the finish line. One thing I know for sure is that we've really got an incredible reputation in the market. And Dustin, I'm sure you agree. Look, there's a lot of people in the multifamily, but there's a very, very small few that are really having great success and they've got a great reputation out there. So that's been, we're super excited for that. So we've just shored up our processes and we're getting in the starting blocks and ready to acquire again.
Awesome. That's great. Yeah. I'm curious on the asset management side. Are you guys using, because you're in different markets kind of throughout Sunbelt and Indiana, you mentioned, are you guys, is that a few different management companies or one management company or are you guys self-managing? What does that look like for you
Cool.
guys?
So we have our main management company. We do not self-operate. We're
Yeah.
cool, but we're not that cool. We incredible,
Yeah.
incredible asset manager. Her name's Kim Wenland. She is amazing. One of the partners here. She is the chick that's gonna make sure that operations are efficient. She's
Oh,
checking
great.
production budgets. She's doing variance reports. Like she has an impeccable background coming from overseeing multi-billion-dollar contracts and juggling those at the same time. So she
Oh,
is
wow.
at her craft. But we've also got our property management company, phenomenal. I'll shout from the mountaintops. Vicinia is who we work with. They've got
Okay.
150 plus employees. We've been with
Wow.
them for multiple years. And truthfully speaking, they have been so good that they actually like, Quattro, where are you going next? We will go wherever you want to go,
Oh,
as
good.
long as you
Good.
have 100 plus doors or more. And
Yeah. Yeah.
it's just been exceptional to work with. Listen, when you give any property management company an inch, what do they take? A flippin' freaking mile, right?
Hmm.
So
Hmm.
it's like you've really got to, the operator has got to manage the property management company. And so when
Yep.
we get on our weekly calls, it's tight. It is so
Yeah.
tight. They know our agenda, not because they're running the show, because we're running the show in the
Yeah.
kind of ways. Like Kim holds tight to every, like we have our protocols and our systems and those key metrics. And anyways, it's been amazing. So
That's awesome.
that's super cool. And
That's
plus,
great.
I think the probably what could make an operator super, super proud is two things. If a broker that you're working with and you're buying a property and they're helping you buy that property,
Hmm.
if they want to come and invest in that property, that's powerful. Number one,
Yeah.
they want to take their
Yeah.
commissions and they want to invest in that property. It's twofold. They know the property is good and they know the team is exceptional.
Yep.
Number two
Yep.
is If you have a property manager that's like, hold on, I want to invest in this property with you, holy smokes, that's an honor too, because guess what? The property managers have the inside skinny of exactly how you operate, the good, the bad, and the ugly,
Yep.
right?
Yep.
That's
That's awesome. Yeah. No, yeah, absolutely. Yeah, it's always been yeah, or when the mortgage broker invest or just it, and people get to see everything and they're excited about and willing to put their hard-earned dollars in, that speaks volumes for sure. So that's awesome. Um it in that's pretty interesting. I was kind of yeah, I was because you guys were in some different metros. That's great that you're able to. I guess it sounds like a lot of it's through that same management company. So that probably helps and makes things easier on y'all's end too. But in the same vein, like I think that we just work with one management company and all that, but I've worked with others in the past. And one kind of benefit of that is you learn different things from different professionals, different management companies, different people with a lot of experience. And so kind of some of those past experiences have been able to bring in the best practices and bring those towards in with the management company that we work with,
I love
which is
that. Real quick, I love that you said that because it's so stinking winking true. Just because we do doesn't mean it's the right way. That's just what's worked for us. But at the same
yep.
time, we've worked with a handful of other management companies from when we started in Inception and 5 years ago. And believe me, we had a lot of things wrong. And we've
Hmm.
honed in and shored up and figured out what works, what doesn't work, and who we're going to allow to do what and who we're going to allow to not do anything. Right. So I totally hear you on that. We've learned it.
Yeah. Yeah, I think the biggest thing, people that, just success and all that, or whatever see success as, I think it really just boils down to a few things that you've kind of touched on, with our time here, like grit, just like, sometimes it's not pretty, but like you just got to put your head down and like get it done. Two, I've heard you mention multiple times, like, growing, continuing to get better and better and better and better. And so I think it's the folks that have been stagnant or, you know, here's their box, they're staying in their box and they're not looking outside and they're not, trying to innovate and trying to get better. I think some of those people are the folks that are maybe in a, tougher spot right now because they, like you guys did, I can't remember your income fund or whatever it was called. That was, definitely like a huge outside the box thing that, at least I hadn't heard about, doing for, CapEx and all that. So kudos to you guys. I know we're kind of getting towards the end of our time here. Is there anything you'd kind of want to part with or, just, people that, there's a lot of people I'm sure you guys talk to and we talk to that are newer. They're like, how do I want to be a GP, or how do I raise capital, or how, like, one thing that, it's a little bit of double-edged sword, but like, it can be challenging to raise capital. But in the same vein, I try not to think about it being challenging, because if I think about that, then it will be challenging.
Yeah.
Not that it's necessarily easy, but like I like a challenge, so I'm like, let's go. But anyways, anything that you would kind of, for someone kind of newer, like, suggestions or anything that might be able to help them.
I love that you asked that. Number one, I will tell you, if you have had the pleasure of working with Dustin, awesome, awesome, awesome. If not, you need to, whether it's him or another mentor, find somebody that's in the game, that's already doing it, that's had wild success. Look at their track record. And if you really are hungry and you are serious about getting in the business, go and be willing to work for free. Go add value. If somebody came to me and they're like, you know what, Erin, you are such a badass. I want to come and I want to be in your ecosystem. How can I come and work alongside of you? I will work for free. I would put them to work because at the
Mhm.
same time, I would want to see what they're made of. But somebody that is not transactional looking to get paid a dollar is pretty powerful. And it tells you the level of hunger that the individual has. So you need to find yourself a mentor or somebody that's already in the game. You can certainly speed up your learning curve by doing that, linking up with somebody like Dustin versus maybe even going through a whole education program that is going to make it take 18 months. There could have been ways that I sped up my trajectory much quicker than it being 18 months before I took down my first 100+ property. There could have been. Number two, if you're looking to raise capital, everybody always says, Erin, how in the world have you raised millions and millions and millions of dollars to the tune of $80 million with my partner and I? How have we done it? Listen, you need to not be begging for people's money. Do not need to be like, oh my gosh, do you want to get in this deal? Do you want to get in this deal? Like if you got $100,000, if you got $50,000, people are buying into you. And if
Mhm.
they know you, they like you, and they trust you, then it's game on. Kind of very similar to how I told you, how did I get the first $2 million? I told those people way in advance, 18 months prior. I said, listen, I'm going to go work on me. I'm going to go learn this craft so good. And when I am there, I'm going to reach out to you and I'm going to bring you into the fold if you desire. So, should I circle back around with you as soon as I get my craft down? And I left the question there. They can either say yes or no. And I took notes of who said yes. The problem is you don't want anyone to feel like a flippin' whore. That you are just
Mhm.
coming to them because you have a deal and you're like, hey, you want to get in my deal? You want this money? Like this stupid, gross transactional thing.
Yeah.
This
Yeah.
is the people business, and you've got to be willing to build the relationship, love them for where they're at, find out what their kids are up to, what makes them tick. Because if they know that you truly care about them and their life and their livelihood and their kids, guys, money is easy. It's everywhere and it falls. I don't even have to ask people to invest with me. They know what I do and they're like, hey, Erin, what have you got right now? Friend, I don't have anything, but I'll circle back around when I do. Do you know how much they love when you follow up? And fortune is in the follow up, and you're following up, and you don't even have a damn ass property. You just one upped on their totem pole. And
Yep.
that's what you do. Think bigger, not like scarcity mentality of I need the money right now.
Yep.
Focus on building and building that relationship really well. And they'll pass you on to people after people after people that will open up doors in wild ways.
Yeah, yeah, I love that little saying. Fortune is in the follow up. Do you know? And sometimes it falls through the cracks on me, so that's part of it. But do you know? I mean, there are so many people that for instance, they're like, "Hey, I'm really wanting to get into multifamily, blah 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 blah," and I'm like, "Cool, send me an email." I never hear a thing. Like it's amazing. So anyways, so just be that 1% or top 10%. Just follow up. Just hey, if especially if you're wanting to work with someone, potential partner, like just be sure to do what you say you're going to do, and you probably, you're already at the top. So, anyways, but how do people get in touch with you? What's, is LinkedIn best? Where's the best place? What's your website? All the whatever you want to give. So,
Social media, I'm all over social media. I post every single day. It's a little variety of everything. Believe it or not, Dustin and I have something in common that's really awesome that I hold near and dear to my heart. And you wouldn't think, okay, that's kind of weird to say that, but it's exercise. Dustin and I love to work out. Why? Because it's so much more than about working out. It's about
yeah,
getting your head right. It's about raising your vibration. It's about that setting the trajectory for the rest of your entire day. And plus, we both have kids. And if we could be badasses and better and bigger and stronger than our children are going to look up to us. And at the end of the day, don't we want them to be singing our praises? Not about just working out, but everything else in every area that it spills into. See,
yep,
us world. So you can find me on social media. I've got exercise stuff, mindset stuff, multifamily investing, our shipping container business that we have. And so you can find me on LinkedIn, Dr. Erin Hudson. You can check me out on our website that we have to book an appointment at www.thequattro, two T's, QUATTROWAY.com. And listen, book a one-on-one appointment with me. I'd love to pour in you, add value, figure out how I can help you move your needle forward. Because listen, at the end of the day, Dustin and I both are one hand up and one hand down. And it's just the law. If we help, Zig Ziglar says it best. If we help enough people get what they want, him and I are going to get exactly what we want. So there you have it.
Awesome. Cool. Well, appreciate your time and great to see you as always. Looking forward to seeing you in person at a conference or meet up here soon. So
All right,
take
sounds
care.
good. Thanks
Thank
so
you.
much. Have a good
All right.
one. Take care.
See you, Erin.
Bye.
Bye.